The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Now, where do we start?
At 205 points down in the S&Ps. Looks like a good spot to me to start.
2,000 down in the Dow, a 550 down in the NASDAQ, 207 in the S&P. I don't think I've ever seen 207.
I'm not sure I have either.
Yeah, no doubt.
It takes a circuit breaker. We already got one.
Gold down $54, trading at $15.88. You got silver down 88 cents, $15.89. Light sweet crude off $1.50, $31.20. Notes and bonds. You get the 10-year up 1.5 points, 138.26. The 30-year up 2.5 points, 182.30. And King Dollar up 900 ticks, 97.411. Euro at 111. Yen is at 104.87, and the British pound is at 125 to 1 U.S. dollar. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, great show every trading day. Kevin's on with us every Tuesday, Wednesday, Thursday. Bottom line, you want to understand the option market, option strategies, futures. Check it out. If you haven't test-driven yet the Thinkorswim platform, great time to do it. Just hit that button. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. And now we're going to put it on Kevin
I wonder
Hinks.
if they're going to have anything to talk about today.
Kevin Hinks, what's going on, man?
I guess our show is appropriately named today. We call it called Fast Market because
there's no doubt.
I think these markets are getting a little fast. There's a message to be sent today to all the people that watch your show, to all the people that watch, or customers of TD Ameritrade, and that is emotion is the enemy of profits. And trying to trade a very emotional market. I'll tell you what, in my career, Tom, I have never seen a data dump of headlines like we had last night.
Yeah.
That was a lot of significant headlines coming out at over one evening of announcements. The NBA, the NCAA,
I know.
All these different stories that came out. So you knew that this was going to hit the market today.
Right.
So, but here's what I want to say. I think it's important. If you're trading these by every 5 minutes and you're trading ebb and flow, that's a little different. But if you're an investor in this environment, worried about your portfolio and looking at your account, you've got to make trades today with a very calm demeanor, looking at what's this market going to be like in 6 months?
Right.
Where will we be? Will we be higher than we are now in 6 months? And if that's the case, if you believe that, which the history of viruses says that 6 months later the markets are always higher, then you've got to be calm and make good fundamental decisions now during these markets.
Yeah, and I think if you have a horizon that even goes beyond that, I myself, my opinion is I'm even more certain, like the longer horizon, that this is a temporary. Hopefully, we're getting into a weird space of how much destruction and the pain on the balance sheet and loans and debt and all that stuff, which is a little dicey for sure. But in the long term, solid companies, man, this is not going to put a hurt that it's just amazing the pullback we've got in
that they won't come out of.
Yeah,
right. Because it's a cash flow deal.
Yes, right.
And what does happen, folks, is this: is that you saw the drawdown on the credit lines yesterday, and believe me, that's the smartest thing that these companies can do, because what ends up happening is that these credit lines will get pulled.
Definitely.
There's no,
you get credit when you don't need it, right?
You take it
right now.
You
before,
get it, and no one, people don't like to go into their reserves, but the bottom line is that is the, right thing to do. There's no
with this much uncertainty, because not all you have to do, but is if you do get over that scare, fear, period of influx, whether it's 6 months, a year, I imagine things come back to normal. And boy, if they come back anywhere near to normal, the haircut we've got is just remarkable.
Yeah. You know, it's amazing, Kevin, when you think about it. You know, we've been talking about the aspect that rates, negative rates, that, you know, in schools, okay, I mean, I can't wait to understand who's going to make the first thesis of how you get into negative rates. Now we're going to have a second one. Now it's going to be the aspect of, you know, a virus, a pandemic, what it can do to markets. So we're in a very cool time, really, when you think about it. Do you know what I'm saying?
There's a lot of unknowns we're about to,
Yeah, because just when you think that, you know, not that we've seen everything, well, we haven't. We know that. In markets, this is...
What happened to no more boom and bust? Wasn't that at Davos? Who said at Davos? No more boom and bust because of the Fed. Remember that? Maybe not so much,
Yeah, no doubt. You know, and
listen, I believe that these markets are really just trying to figure out where the right prices are.
Yeah.
Right.
You know, I mean, everyone's trying to figure out what the demand is going to be, but, you know, I honestly don't think, you know, there's a term being thrown around in media today about we've entered bear market territory. I fail to identify this trade with a bear market. Bear markets are a weak economy and markets going down over weeks and months. This is an event. This is a black swan event. Labeling this a bear market, I think, is a miscalculation because
it feels different.
Temporary.
Yeah,
I would agree. It feels different. And that's why I think I'm so confident 6 months, a year, 2 years, as long as things stay. For that same reason you're saying, Kevin.
And that's why Kevin started off the emotions.
I agree.
Listen, folks, we know it's not easy, but the emotions are the big deal here.
What was 287,000 jobs added last month? There's going to be a pause. But...
Kevin, we look forward to the show. 45 minutes. Thanks so much, man.
Have a great day, guys.
You too, Kevin.
Stay right there. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 1,800. NASDAQ is off 500. S&Ps are off 193. Let's get over that gold market and see what she's trading into right now. So we're down $62. You're at 1579. Well, there we go. I see. Okay, so we're going to go after 1564. 1564. That was the wild day, man. Okay, so Let's take a look at this.
There are only wild days from here on out. Don't you know that?
Well, this is pretty impressive. So we're coming into, so we've done 308,000 contracts. And we probably will do 700,000, but we're coming into 746,000 contracts in the gold market. So bottom line is that, we'll basically test that. Let's go look at a couple of the larger equities inside that market. First, Barrick Gold. Barrick Gold went down to 1547. Now, rejected lower price ASAP. It's at 1691. Okay, so that's going to be impressive too, because it's coming into 389 million. That's on the monthly though, so it's hard to tell. That low there is 1583. We did 1547. So at this point, it's rejected where we broke topside from in. I can't see that.
That's August of last year. August 30th. Yeah, it's a monthly, so August. Yeah.
Yeah. So you got. Let's go to Newmont and take a look at Newmont. So Newmont, as well as the Barrick, those are the two largest weighting structures inside the XAU and the HUI. And we take a look at this. This is also got smoked, but yet rejected lower price. So look at these gold stocks: 39.52, and now you're at 42.49.
Yeah.
And
that's quite a weekly bar.
This is a different bar.
What is that formation going on, man?
This is 50 to 39. So now on Newmont, you want Newmont to close above 43.53 or 42.45.
Right, yeah. Who knows what Friday action's going to be like, man? Because the scary thing is, in terms of the numbers, and is that some people saying, right, Italy is slightly ahead of some of the worst parts of Europe. They're slightly ahead of the U.S. And if the numbers go as they go, I mean, within, you could see the next week or two is going to be a critical, which was why you saw the president come on last night, I think. That's where you see it go from 1,000 to 2 to 4 to 8 to 10. Pretty quickly. And so that is where you come over the weekend. We're on Thursday. What is Monday going to look like? What is next week going to look like? You're seeing some of that get priced in with the market right now, man. And how about go ahead. I was going to say just the ECB with Lagarde not cutting rates.
So I want to go to China first.
You think the president will have something to say about that?
Yeah.
Not coming down on rates as the Fed is just going to...
So the Hang Seng, this is important to wrap your head around. Now, this is where... No, I don't want the Hang Seng. I want China. Okay, so the Hang Seng is a mixture of
maybe the CSI 300.
Yeah, no, it went to Shanghai.
Yeah, sure.
So Shanghai. So when you look at this chart, man, it's I'm going to keep this on the daily because I want to see how many days that they actually went down. So remember they were closed, right? So
they had their new Lunar New Year intervings as well, right? So they were already going to be closed. They closed for longer.
So we went from, if that's the Lunar New Year right there, which it would be. So we went from 3,045 down to 2685. The differential here, though, inside of this is that, and that's what I got to figure out. That's only like 3 days they went down. They gapped down tremendously, and then they clawed themselves all the way back.
Yeah. Now, what could be happening there is that you have a dictator running things that just shut down 60 million people and really got a handle on things pretty quickly. And I don't know if that's even legal. There'd be challenges, to say the least,
that's for sure.
if that happened. And so that's kind of not the worry, but that China really did. If you believe the numbers coming out, I heard something like 12 new cases or something yesterday after thousands. So, and that maybe you're not seeing the demand. They were all worried about getting it. I don't know, because you're right. It's not as drastic a move at all.
No. And, you want to pay attention to that. There's no two ways about that.
Definitely.
So if we go back, let me just, the way this market is traded, folks, the danger, we already know what the danger is. You just keep going lower. My take is that we're going to go after this December 2008
that low of the Christmas Eve.
So that's 23.46.
Hey, that's 200 points. We're down 200 today.
It's all, it's
exactly 200 from where we're at, and the print's down 200 right now.
Now, the problem is, if we go over Europe has already busted through these levels. So if we go to the DAX first, and we take a look at the DAX, you're going to see it just blew it away. Is that December?
Yes.
Yeah. So December in the DAX was 10,279. You're at 9,421. And then we look at the UK. And same with the UK.
It's not
in a
even
big
close.
way. So this is going to be like a little problem child here.
Could you pull up the Dow?
Yes.
Just Boeing, man, just getting pummeled.
Right.
That I think they might be below that level.
Well, that's good to know. Yeah, exactly.
And that's going to be distorted.
But it's real.
It is.
So there you go. See, and that's a high volume low, man. I mean, 21,712.
Yep.
That was a high volume low.
And we got as low as 21.3.
Right.
We've popped 400 points. I mean, I showed you the pop at the open on the S&P, and I said the open after the circuit breaker.
Right.
96 S&P points we traded from low to high at about 955.
Yeah.
So, the volatility's to the downside. Don't mistake that. But when you can pop 96 points, now that's after a circuit breaker. I told you that was literally as it's going. Wait, it's down 7. It's down 8. It's down 9. Are we really going to go right to 13? And then it goes 100 points up.
You know what's really good?
What's good?
That you're getting baptism by fire.
I sure am, man. I said on my morning market kickoff.
I'm totally serious.
No matter what you think it can't do, it can do it, man.
Right.
It can do it. And
because you can't teach these things, folks. What I've learned in the markets in general, technically, fundamentally, you can basically have theories of how everything works. You need to go through these. I'm not saying this is good, but what I am saying is that you can get so much experience out of this because that's the only way it happens.
Yeah.
That's the bottom line. I mean,
So you have a Lagarde press conference, I believe, and they're talking, even the next press conference for the ECB, no more press conferences, man. They're going to be online, that coming. You're going to see that consistently. And there's your S&P is remarkable. Well, now I know what they look like. It's becoming a regular thing when they're at 5% down. They just tick across the bottom of the sea, man. Pretty remarkable. We're at 2,600. I said earlier this morning, right? Thinkorswim platform.
Yeah.
I just want to put it back on the 20-day chart, hourly, right? There's your all-time high in the S&Ps. 33.97 on February 19th. This is a 20-day hourly, and we don't even go back 4 days to the beginning, man. And we just hit 24, so you're talking about 900 points off 3,300 in the span of a 20-day chart in the S&P. In line with, we haven't even gotten a single jobs data point. I mean, think about that in terms of one single point. We haven't even had a Fed meeting, man, since that time. So pretty remarkable how that goes out.
Dow Industrials right now down 1,700. NASDAQ is off 460. S&Ps are off 173. Stay right there, folks. Tell me, I'll come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 1834, Nasdaq's off 518, S&Ps are off 189, and we got natural gas. Let's see where we're at here, right?
We sure do. So lost in the world of a plethora of headlines, man. Normally, one of the things we'd spend more time on is natural gas inventories. 10:30, those numbers just coming out. Those stockpiles falling, 48 billion cubic feet. Looks like the median estimate was for a decline of about 55. So let's jump over and see where we're pulling up. I'm going to close this real quick. Pull this up, get into commodities. Let's see where natural gas is trading. $1.80. We're looking at the April contract, and slight reaction on that news. You see the volatility at 9 o'clock this morning, 178 to 183, but no real action in the face. I mean, you back that up, right? Just even since Wednesday, we dropped from $2 to 175, man. Yeah. Just mammoth moves in that natural gas market.
And let's pull up, so the world commodity markets at with
GLCO.
GLCO. So you're going to see some damage here, folks.
Because oil right with the markets last night at 9 o'clock.
Right. Yeah. And then if we get into the agriculturals, you can see there's, I believe there's some heavy damage here. So you get beans, CBT, beans. That's down. Well, it's not that bad. It's down. Oil is down 3.6. Soybean oil. Sure. Corn's off. So let me see. Soybeans. Let's try this one. Remember we did this yesterday. This had a high volume low. It was coming off of. Yeah, blew right through it. Okay, so I would not be stepping into these things because it had that high volume low there at 867. You're at 859 right now. This thing's not over. Not even close. In fact, let's go over to Boeing. I
was going to jump around to some. Go for it. BA.
Yeah.
So, of course, yesterday, right, they pulled that 13. I thought that was a great idea. Like you're saying, why would you not, take that type of money if it's available to you? The market, taking that as a harbinger of tough roads ahead, which, of course, you should know that that's happening anyway. Any smart CEO, I think you're right. I mean, take up, because the banks are going to cut those lines off.
They're going to pull back.
Yeah.
Right.
You want to secure that money, pay the cost to secure that loan for the hump that you have to get over, like we were talking about with Kevin Hinks, especially a company like Boeing. But, man, even today, I mean, you have a travel ban through Europe for 60 days, man. Not what Boeing needs in the face of everything else. Yeah.
And you can see, we blew by the first price projection out here, which was, where it broke topside 197.
July of 17.
Unfortunately, what's game here is 130. What's that? 134, 124.
124. Okay, what is that? And that's the high of the low from February of 16.
Yeah.
I mean, what's really crazy is you're flirting with this area that we traded in from late 2013 to late 2016 almost.
Right.
You get back in that range, and that's a range basically from like 116 up to even the upper range, 148. We're right near it, man.
And, we had a question on the small caps. You can see the small caps had been the weakest the whole time, and they're trading at 2014 levels, So that's,
okay.
If you really want to understand technically how this works, it's.
And would it make sense, because I don't get into the small caps as much, would it make sense that a company like a small cap might have a tougher road because you're not as big to weather this type of a storm, right? Yeah. I mean, just intuitively, that's what I would think.
Exactly.
Yeah.
So what happens here on something like this is that you have to have reserves, right?
Definitely.
To stay in business. You had to have good credit lines. And you got to pull the credit lines.
Yeah.
If you have a credit line, folks, I tell you, man, just pull it. It doesn't, you're going to pay some percentage, but what tends to happen is that everyone is going to tighten up. At the very beginning here, where no matter, this market could come all the way back and you'll still tighten up.
It's a wake up, right?
It's a differential in thinking.
I got to get my balance sheets in order a little bit tighter, man.
It's a differential in thinking, exactly. And it takes longer for certain segments.
Sure.
You know what I mean? To get hit. But my take on this, that everything will get hit.
I mean, I was thinking just jumping around, right? But you got Carnival out there. Did you see? So they're suspending all their cruises for 60 days.
Right.
You sure. Like, why haven't they done this already, right? With headlines. Who is cruising right now? I understand you put the money down. Folks, it's not the end of the world, right? Do not go on a cruise, my goodness. Let alone they've suspended them, but maybe the other cruise lines will follow suit now. Because how are you going to be a cruise line when Carnival said we're not going?
I pay for all that expense.
It's already paid for sometimes.
Right.
That's where you get you have to make that call.
Right.
But down at $16.60, man. I mean, just a remarkable run that these cruise companies.
I'm really surprised. So in St. Pete, folks, okay, we have the this week the race.
Grand Prix. Is that going on?
It's going on.
I saw.
And I'm really surprised.
I said, because we're right in the office. You can hear the cars.
Yeah.
It's a great time.
It's only a block away from us.
Maybe not this year.
Yeah.
Next year, come on down and go to it, because I went to it last year.
Right.
It's that's where they do it in the city, close it off. They do it in a number of cities. So St. Pete, they come into town. And I saw them setting up today already. Well, they've been setting up all week. I just saw even further road closures beginning, because I think practice rounds are tomorrow, aren't they?
Yeah, because remember, what ends up happening, we can get down on Friday, and no one's there, and it's awesome.
It's just practice, but it's just as cool, man. Yeah.
But I'm really surprised, I can tell you.
When I pulled into work today, I said, I ain't going to that. That's exactly what I thought.
I think it's going to, politically, I think it's going to be a problem that they decided that, okay, we're going to do it. This is supposed to be a city that's forward-looking.
Yeah.
The bottom line is that they should have bit the bullet, man. I mean, it's big money. I understand that.
Of course.
Okay, but the bottom line.
No one's saying they're easy decisions, right? You got to make the hard decision, man. I saw there's a mayor out there today. I forget what city it is, so I'm not going to say in case I was wrong, but there's a lot of comparisons when politicians, and I'm not just alluding to the president, it's other politicians, right, putting positive spins. Mayors, you're going to see some cities make drastic moves, some cities not, right? And the cities that are just acting like, no, we're holding this is open, yada, yada.
It's not good.
They're getting compared to, and I'm dating myself, the shark, Jaws, the mayor in Jaws, who says beaches are open, right? Everything's fine, because it's kind of like eerie when you hear somebody talk so glorifying everything, and you just know that's not where things are. So hopefully people be careful. Because again, it's only going to be a period of time, I think. But it's critical in that time that we kind of just lock things down a little bit for a month or two.
It's not the end of the world,
exactly.
man. But, it's like, why are you going to step in front of a train?
Well, you had the NBA last night, so I'm not sure if you saw this.
That's heavy.
The story, how it all the pieces. Did you see the guy?
I heard you did the update.
Yeah.
Let's recap it, though.
So it goes. So NBA last night, Utah Jazz player tests positive.
Yeah.
They were going to start the game. Players on the court getting ready. They pull the refs aside, send the players back to the dressing rooms. Nonetheless, they end up canceling the game because that player tested positive. Not long after that, the whole season canceled. The thing where it gets interesting, ironic, I don't know what you call it. They had canceled the shoot-around press conference, something, and they brought all these players out to a podium, and this player, I forget his name, the player tested positive, was jokingly touched every microphone purposely to make light of the fact, and this is the gentleman who tested positive, so this is the problem, right? The people they set up a protocol, they make them go out of their way to go out of their thing. He makes light of it, touches every microphone. He tests positive literally days later. Rudy Gobert there in the den. Thank you. Yes, not appropriate at all. You saw it, and not to call it, you saw Matt Getz, right? Florida makes light of it, putting a mask on in Congress. He's quarantined days later, all right? That's irresponsible behavior. Across the board. So hopefully that stuff curtails as this stuff keeps adding up. I couldn't believe it. I watched the video. He literally jokingly touched every microphone days before, and then he tests positive. Those are the things put in place, man. Come on.
Dow down 1,700. NASDAQ up 476. S&P's up 171. Stay right there, folks. Tommy and I come right back.
Yeah, can you believe it?
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 1830, NASDAQ up 506, S&P's up 187. Let's go to Kevin in Kalamazoo, Michigan. Kevin, what's going on, brother?
Hey, Tom, how you doing? Hi, Tommy.
Morning, Kevin.
Doing great, man. Yourself?
Doing well. It's a nice day up here in Michigan.
Cool.
Awesome. Thanks for calling, man.
Totally.
Hey, yeah, thanks for taking my call. I had a question for you. Trying to get my head wrapped around a bond fund. So in a 401k, you don't have a lot of options, equities and bond funds and money market. And months ago, I put some money in a bond fund that I didn't want to put at risk. Oh. And I'm trying to quantify now that this had this big move in bonds, how much risk is in this bond fund? And what will happen with this thing, as rates go to zero, I guess?
Well, okay, this is a great question. Now, a bond fund, folks, is different than buying bonds. So, a bond fund can have A, B, C, D debt inside it versus when we talk bonds here, we're talking treasuries. What I would do, I'd find out real quick what's inside this bond fund, okay? Because what is happening right now is that credit spreads are widening out, and you're going to have bonds that were B, will probably be D. So that's crucial for you to understand.
Yeah, yep. And this is a government bond, a government bond fund.
Okay, that should be really good then. Okay.
Okay. Yeah, it's very, there's a variance of expiration dates.
That's right.
The terms of the bonds is all over the place.
How long have you owned the fund?
I've had this. We've been in this 6 months.
So you're up on it, right?
Yes.
Yeah. I'd almost say to you that you should sell it right now. And just getting cash. So this is why, folks, okay? I'm bullish bonds, okay? But what has happened is that the 10-year, the 30-year, they did the full price projection of an ABC structure on the way up. Most times when that happens, you're going to do something different. And you can see this out here today. We'll limit down. These bonds are not up that much.
Sure.
So
yeah.
We're at an inflection point, I would say, that inside the bond market that I think you got everything out of it at this particular point. It doesn't mean that in a year from now, bonds are going to be higher. But, right now, I think, the market is even saying that the 10-year is only up a point right now. So that's saying to me that, guess what, these bonds aren't going to be moving that much higher right now. So,
I'm not so much worried about making money as I am I went in there to avoid risk with this
right.
part of the money. And,
avoiding risk, and you're going to see this a lot, is just going to cash, period.
Money market, yep.
Yeah. And, that's kind of how I'd shake that out. And that might be shocking to some people because I've been bullish so long, and I'm still bullish, folks, but I'm just trying to explain to you that when things reach their price projection, they reach their price projection. Sure. It is what it is.
Yeah.
And that's where I think we're at. I mean, the market is saying that it's screaming it actually out here today. This 10-year and what does happen, this is what happens in a market like this. All prices are going to be recalibrated because everyone has less money.
Sure.
That's how this goes. You know what I mean? You can make a argument saying, okay, hey, listen, these things are on sale. Yeah, you can make that argument, but you better be understanding, if you're a fundamentalist simultaneously, that anyone, whether it's 401ks and all that, they're all down 25%. Yeah. So there's a differential inside the thought process of where we are, and that's important to understand.
I just pulled up the TLT, right? That's a longer term one.
Right.
But I mean, look at the price risk you have if you just got in. Now we're going back further, but man, you just went from 111 up to 180.
Exactly.
That's remarkable. And I'm looking, Kevin, I got it just from November of 18. But even if you take it from even, July of 2019, that's approaching 6 months from where you were at. If it was the TLT, just right, 130 up to 180, you're still at 160, and you were just trading at 139 to start the year off. Huge price moves.
That's a big move. Yep.
Yeah.
Back 2008, I think it was, 2009, the money markets broke the buck. Do you think that's a risk happening again?
Yeah, for sure. I mean, because, money markets in general, the bottom line is that you have the aspect of they're buying short-term paper, and short-term paper is almost negative. So, what they did do is that they put a few different rules in order to basically hopefully change that. Now, you don't have to go, I don't believe, unless the thing is really, you don't have to go into a money market. You could basically tell them flat out when you're selling that bond that you just want that in cash, period.
Okay. I'll check that
because
out.
Why go to a money market when it's like 0.001 when, if something happens to the money market, well, then you have a problem versus saying, no, just keep it in cash. The FDIC is, going to be what, the $250,000, not that it's a lot, but the bottom line is that it's a different, you're not trading anything. That's where if you're selling the bonds right now, that's where I'd be. Say, listen, man, just keep it in cash. That's it. And you'd have to direct them because what does happen is that when you sign these contracts, unless you direct them, they're going to put it right from when you ever sell it in that money market.
I believe you just have options so that's where you'd have to like almost drop down menu type options on your So
yeah. And then let the thing settle down. Yeah. And you get your cash, and this is,
because it won't be that long, I imagine, too.
No.
You can decrease some of this craziness of 6-7% on a daily basis and get the money back in there, whether it's at bonds, even at a lower price potentially.
Yeah. Cooking, brother.
Okay,
man.
Thank you. Yeah.
Thanks, Kevin.
Take care, you guys.
You too, man.
Have a safe one. I saw a great commercial last night. I should have just talked to him on the phone. The guys that we have Culver's down here, folks.
Yes.
And first time I saw the commercial, I saw the guy that started it, and it's a great commercial, folks. Okay, Culver's. I've never been in the place. Okay, but they're beautiful from the outside. And the guys from Michigan, and they were just showing how they still. Basically, great commercial. How they do fish by hand and batter it. And it just reminded me of it because he talked like him, too.
Okay.
I got a nerve, talking like him, right? Park the car in the garage and eat some potatoes.
There we go.
So, where else we want to go?
Yeah.
There's plenty of places to go, folks.
How about some of the like go. Uber and Lyft? I was just going to say travel stocks.
So let's take a look.
Because, of course, no one's going from Europe to U.S., U.S. to Europe.
Uber's rejected lower price already. Yeah, this will be interesting.
Yeah,
whoops, can't put it on.
We had the S&Ps pop 100 points, so they all got kind of a crazy print on that 7% to 9% circuit breaker.
Okay, so you got Uber. The high volume low is 25.58. Now it has to close over it.
Yeah.
Hit 23.
I really can't wait to hear how these companies try and look for their forward guidance. Because one thing that's always amazing, right, is analysts so smart. That's their job. They get into these companies. They know exactly what to expect. They're going to make 24 cents a share, $6.08 billion. They peg it every year. There's so much they don't know. That's what the market's struggling with. There's an analyst can't peg what coronavirus is going to do just yet. So what's it going to do to Uber? What's it going to do to, Apple, Microsoft, Amazon, deliveries, warehouse space?
Totally. Stay right there, folks. Tommy and I are coming right back. Dow's down 1760, Nasdaq's off 476, S&Ps are off 174. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go into this S&P and see highs to lows, see what we can...
What's in the green today?
Maybe get
Anything?
a little bounce out of this. Let's see. So, okay, so that was the first bar you were talking about. The first bar right at that 950, right?
Yep. You came out of the circuit breaker, extended losses down, and then kind of turned it around, thankfully.
Yeah, so the market's going to go after this right now. They 28.58, 25.88.
Okay.
And this is going to be an important one, folks, because if you can break that, that'll get back inside of,
26, I think it's 2601 was the 7% number.
Yeah.
Excuse me, no, 5% that it ticked out. It was basically 2,600 ticking at 5% all night.
So keep that in mind. This says 25.88.
Okay.
And what this also is, this is like the Wyckoff ice. This would be, you jump the creek, you go sideways, you jump the creek. If you get above the creek, man, the bottom line is that you just could get this action going, and
it creates a real easy level of visual when it can't trade below 5%. Right? It's a nice simple line when 5% is the night overnight. Yeah, the limit overnight.
There's no doubt.
Yeah.
Palladium tumbles 17%. Oh, look at that, 17%.
I know, right?
I'm like, Palladium has been through the roof anyway. I mean, it's incredible with Palladium.
And the headline we're talking about, just 17% heading for a bear market. I mean, some of those metals getting hit pretty good today. Palladium,
and that's the car market. That's that's the PAL. Let's see if we can get this Palladium. That's the March contract. Oh, we'll take it.
Generic first. How about underneath it?
Oh, there we go. I got the active. There
okay, perfect.
So
June, there we go.
Down 359.
I mean, it's at 1870. Gold's at 1500. That would be like gold trading down $300.
Look at this. This is traded down $1,000 in 3 weeks.
Man,
27.89. Folks, stay right there. We got our man, Mr. Kevin Hinks, coming up next. And Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon.
Hold on to your seats, man.
Ride 'em, cowboy. Thanks, pal.
Thanks, man.
We'll get 'em, folks.